And again, very delighted to host our esteemed panelists. We extend a warm welcome to Wilson, who is the co-founder and managing partner at East Ventures, Sachin Bhanot, who heads the investments for Process Ventures in Southeast Asia, and Wu Juen, who is vice president at Temasek. Welcome, everyone.
Thank you, Rosan. How are you?
Great. Good to see you, Wilson.
Hello, everyone.
Hi, Wilson. Hi, everyone.
Hey, everyone. Hi, thanks for having us.
Great. We can hear you loud and clear and also see you. So without further ado, I think we'll just kickstart a session. Now, one of the things which has been on top of a lot of people's mind is the pandemic, unfortunately, has lasted a lot longer than what we would have wanted. But it has thrown up very interesting insights and takeaways and lessons for all of us during this period. So as investors, I think you would also be using your learnings and your findings over the last 1.5 years to sort of look at things as they have evolved, and also looking forward how things are likely to play out. So just trying to understand what would be some of the key takeaways here from the pandemic, how it has impacted the overall ecosystem and your own thought process. So that would be the first broad question I have for the panelists. And I just leave it to panelists who would be interested to take it up first. Anyone interested?
Yeah, I can make a quick comment on those. So
sure.
We believe the crisis brings clarity. So all our startups now able to differentiate between what is essential and what is non-essential. Give you example, if you are sick because of COVID, oxygen is essential, expensive watch is not essential. It's very clear. So we really go back to the core principle, core competency of each of startup. They relook everything, what actually they're really good at, and what are things that they are not good at. They multiply and double down on their things that they are good at. That's the first one, clarity. The second one, we see how the founders able to react to the situation. And this kind of like the test of fire for every one of them. The median age of our founders is about 23 to 24 years old when we invested in them, because we started from seed level. Some of them still pretty young. So within this range of age, the crisis in 1998, probably they're still in primary school. They're still very young. And then during the 2008, they're probably in high school or in the uni. This is the first crisis in their lifetime. However, those founders that are able to navigate and bounce back, actually getting really strong. We believe that things that doesn't kill you make you stronger. So these are the two lessons that we have learned so far. Very
helpful, interesting perspectives there from Wilson. Sachin, Wu, would you like to add on to these?
Yeah, I can add. For me, actually the number one lesson that I feel that really brought home to me is the importance of being mentally prepared for the unknown unknowns, really, and the realization that at the end of the day, the tail risk, i.e. the low probability but high impact events are all that truly matters when you think about your portfolio construction. These are the risks that kill some companies but help someone become great, like we just said. What didn't kill you make you stronger. And these are the risks that rewrite the whole history book. So I remember prior to the pandemic, we were debating endlessly about, China-US trade war, Fed interest rate policy, and so on and so forth. And then the pandemic hit, and bam, you have millions of job losses and lives losses. It's really a sobering moment to reflect on that. And this to me will be a long-lasting lesson when I think about building a portfolio that could stand the test of time. That would be an enduring one for me. The other one, maybe more practical to the company level, is that we found out that in the time where your customers also suffer, at least equal or even more than you, then some of the extra service, they're not becoming extra anymore. They become the thing that make your customers stick with you. And then we have seen some of our portfolio companies that do that. They happy to go the extra mile and on the small service to keep a helping hand to the small customer, especially the SME one. Because in Vietnam, as you know, SME is a very important factor of the whole economy. Due to the dominance of SME segment, it's very important to have the right strategy for them. And so we found that little extra service actually really help and make your customers stick with you. That's for me.
Very helpful, Vu. And Sachin?
Yeah, sure, Roshan. Thanks. I think Wilson and Vu have touched on a lot of the key lessons, particularly from a startup and a company standpoint. But during this period, I guess as investors, we've been doing some soul searching on what are the key lessons for us as well. And I think if you really think about things in the context of risk reward, we are in the business of predicting the future, right? And I think one thing COVID has really taught us is that it's something that is very difficult to do. I think even if you put COVID aside, we are witnessing unprecedented progress and change, which makes quantifying risk a lot harder. And if you think about it, 100 years ago, barring a war or famine or a plague, I think that it was much easier to predict what the world would look like in 10 years. But today, I think any one of us here on this call would sort of really struggle to predict what the world would look like in 10 years. But I guess, on the reward side, COVID has really spurred an irreversible shift towards digitization across all aspects of life. So, there's this interesting saying that goes, there are decades when nothing happens and there are weeks when decades happen. And I think the sort of COVID period really exemplifies that. And so in this context, I think we are, really living through a golden era for tech, and the opportunity set has never been larger, especially coming from an investor perspective.
Great. Very, very interesting perspectives there from Sachin. Thanks, Sachin. So I'll just circle back on the same question just to probe a little bit more. Wilson highlighted how it was important to discriminate between need and something which is not perhaps categorized as need. And then also being mindful of the experience some of the founders in the portfolio have and how you handhold them. And eventually those who succeed, they emerge much stronger. Any sort of examples you could illustrate either at a sector level or in terms of portfolio companies, just to bring out how some of these companies might have navigated, Wilson?
Oh, yes, of course. We have a lot of story to tell and to share for the next generation of founders. Well, but I will pick up the classic one, Truffaloka. It's because this is a badly hit industry. In March 2020, the revenue of Truffaloka down to zero. $1 billion company, revenue zero. It's heartbreaking. You almost cry. Look at the P&L. However, the company is pretty interesting because the top management immediately relook the whole business process. They do some efficiency. They try to find their core strength. They look at all the businesses that are probably no longer relevant after the crisis. For example, like Budget Hotel Network, they cut off that business because they think the consumption power will going down. So it doesn't make sense actually. So 5-star hotel will go down to 3-star price. 3-star hotel will go down further. So the lowest part will go on. That's what their hypothesis. But one thing's important about the company, they recognize that this is a crisis. So if you know this is a danger, you can react faster than others. Many of the company, they don't know this is a crisis. They thought this is not a crisis yet. We are about going to the crisis. So what happened was, company that recognized the crisis, they will quickly anticipate. And there's one lesson that we always advise all our founders. We say that it is very important if you do efficiency. You cut it once, you cut it deep, and you cut it fast. You don't want to suffer multiple cuts. For example, if you're sick and the doctor send you to the operating room, how do you feel if the doctor operate you a bit here, then after that heal, then he operate you a bit here, then heal again? You will be suffer and demoralized, right? So the best actually, you just cut it once, cut it fast, cut it deep. Why? Because it is important to maintain the morale of the staff that remain. The morale need to recover fast. And during the crisis, it is very important that everybody morale level is high. So it could go down, but after that it will recover. And then when the economy just recover a bit, the staff morale are already high, and we can run together again. Revenue zero in March and April. In December 2020, out of the blue, they are profitable. So this is a amazing turnover. Every single quote that I say, things that doesn't kill you, make you stronger, bounce back stronger, whatever, it applies to them. So that's some of the classic story that's going on in my portfolio, and many, many, many others. Different cases, different spectrum, very inspiring.
Excellent one. Great lesson there for all of us. Thanks, Wilson. I'll just move on the same question, just probe a little bit with Wu's response on the relevance of SMEs and how they play an important role in the economy. Just wanted to understand a bit more on that, Wu. How do you see the ecosystem coming to place and then sort of help the SMEs in Vietnam? And the larger theme at play here is also the digitization theme that you might have also seen in Vietnam. Any color there that you can share about what you're seeing on the ground would be helpful.
Yeah, sure. So, during the COVID time, as you sure you're aware that the SME segment are the ones that have been hit the hardest. And in Vietnam, the Vietnam economy is very reliant on the SME side. And we used to joke that in Vietnam, everyone is a small business. Literally around you, people do side business all the time. They sell stuff on Facebook. They sell stuff on Instagram, Zalo, and so on and so forth. It's interesting dynamic in Vietnam that the social commerce side, i.e. people selling on Facebook and so on, make up almost half of the total e-commerce market. So that tells you the importance of the SME segment. So during the COVID time, they were hit the hardest. They got payment terms that are due. They got rental to pay and so on. And then at that period in time, if you are a business, you are serving them. The key is to share some of the pain with them, and to help them to either improve their operation to some extent, or give them some extra service. And then I can take the example of one portfolio company in Vietnam who serve the logistics segment. Right? They really have grown super fast during that period with the enemy segment, just because they are on the ground. They know the place, they know the way in and the way out. They know even the psychology of their customers. And so they have a dedicated sales team and service team to help their customers. And so we see an enormous growth from the SME side, while the main sort of platform side, you have the typical growth, right? But the SME really have shown us how being just providing a little extra help really bring home the the growth that you have been expecting, you've been hoping for. So that is what show us the importance and the potential of the SME segment in Vietnam.
Great. Thanks for those pointers, Wu. I'll just move on and then just check with Sachin. So he said that these are interesting times when you actually look at investments and then the kind of risk and returns, and the things have been really kind of different world altogether. In the sense, things have changed quite a bit. Along those lines, Sachin, is there something you'd like to highlight how your decision making has evolved over the last few quarters, and how is it different or similar to what you were doing in the past? Any, say, key things you look out for in terms of investing a sector or a company? What are those necessary ingredients that you look out for when you sort of take a call like this is a good sector, it will withstand the crisis and then it will emerge stronger, and whatever those metrics are? I mean, some big picture views there from you.
Oh, for sure, Roshan. I think that this is a fully loaded question, but I think that despite the crisis, there are still a number of fundamentals which we hold dear to. One, we are always highly motivated to back the best teams. I think the thinking here is that if you back the best teams and founders, as Wilson alluded to, in good times and in bad times, these are the folks who are able to adapt. They are able to not waste the crisis and sort of come out stronger, right? So backing the best teams, for sure. We're always looking for sectors which are addressing large societal needs, and there are many of those here in Southeast Asia. And sometimes, it's an existing market, and sometimes you are creating a new market from scratch, right? And of course, I think the other element is, we are looking for, we sort of tend to look for companies that are capital efficient. And look, some sectors have, different financial and growth profiles versus others, but sort of companies that are, are frugal and, take a sort of return on capital mindset, right? And yeah, I would say, and lastly, of course, you are looking for products which are able to sort of scale organically and, build those, seamless flywheel effects, and build moats and really drive their sort of value proposition as they scale, right? So, these are sort of high level criteria that we look for. And of course, depending on the opportunity, on the market, on the sector, you will then, usually drill down into some North Star matrix, and all that will then somewhat feed into your investment thesis and your, key risks and your threshold questions, which then fundamentally gives you comfort on whether or not it's a right opportunity to pursue from a risk reward standpoint.
Great, great. Thanks a lot, Sachin. We'll move to the next sort of question I have for the panelists. And this is looking forward now. There are so many trends now. Of course, digitization is one of the trends. There are trends and talks about sustainability being important, and so many more. Like, so if you were to pick, say, 3-5 trends or no, 3 interesting things to look out for over the next 12 to 24 months, what would be those things to look out for? It could be consumers, it could be SMEs, it could be any sector of interest to you. Maybe we'll again circle back with Wilson taking a stab, and then.
Oh, we are sector agnostic, Roshan. Anything that make money, we will invest as long as it's legal. Yeah. And the way we look at the sector agnostic, as long as it's make things 10 times cheaper, 10 times faster, using digital technology, we will invest.
Right, great.
So it's really like sector agnostic. And we put a lot of focus on the management team, because we strongly believe, regardless what industry you are in, regardless what crisis and circumstances, as long as you invest in a good management team, you have a good sleep at night.
Right. Great. Helpful, Wilson. I'll just move to Wu and Sachin. And anything else? I mean, Wilson, you would like to add, like, anything interesting you see on the horizon? I mean, these are, I think, the points that you mentioned. These you have held fairly dearly all throughout. So I don't think there's a major change in these. But anything as you look out, like something which perhaps would have taken a 5-year, 10-year is now opening up as an opportunity.
Okay. If you look at it from the technical point of view, Indonesia actually in the inflection point. So why I say this? Because end of last year, we have about 74% internet penetration. So this translates into 200 million population that using internet, spend money in using digitally. And if you compare from 12 years ago, when we started East Ventures in 2009, we only have 30 million internet users. 30 million, 200 million, delta of 170 million. This is huge. And in order for other region to have this kind of delta of wave of internet user, the population must be Southeast Asia now. So we must go to Nigeria probably. We have to go further emerging market. So when you have this wave of internet user, what does it mean? Anything you throw to the wave will go up. So that excited we are right now in Indonesia.
Got it. That's helpful, Wilson. Yeah. Wu, you would like to share some thoughts on where you see the next areas of excitement, interest, trends emerging? Anything?
I think when I think about Vietnam, what excites me the most is actually the public equity market. So I don't know if you know that Vietnam is still a frontier market in the categorizations. So we are not even an emerging market yet, despite all the growth and all the excitement that people talk about Vietnam. So Vietnam has been many times put on the radar for FDI categorization into emerging market, but we've never really qualified for that. And then, if I look at all the quantitative metrics as well as qualitative metrics, I just feel that Vietnam has to be an emerging market. And even when that happens, it will sort of unleash more amount of flow, capital access for the country, and really bring the market to the next level. And then when I, over the past a couple of months, we really saw an inflection point in the depth and the liquidity of the public market in Vietnam. We used to had a problem with the lack of liquidity for stock trading in Vietnam, but over the past, let's say, couple of months, the daily volume now has reached about $1 billion per day, putting Vietnam to the number 2 in Southeast Asia, just behind Singapore, I believe. So it really went through an inflection point, and the millions and millions of people have registered their brokerage account to start trading stocks in Vietnam. So the benefit of that is, besides the access to capital and the new channel for investment, also open a new market for IPO for companies in Vietnam. All the tech company or startup company, when they think about 5-10 years down the road, they see clearly this is a market that they can IPO, they can be public, and that's really has been that will be, I believe, a wake up call for many founders when they think about their long-term plan and how to improve the access to capital and to last longer.
Very interesting. So I think this high level of retail participation in public markets, this is a structural trend we are seeing across many developing countries. I believe we've seen this in Indonesia and other parts of Southeast Asia as well. So very interesting perspectives there, and also brings in access to capital for the new economy sectors also. Very interesting points there, Wu. And I'll just switch to Sachin and then get his thoughts on what gets him excited as he looks out for the next few years, and then what are the trends we should also take note of.
Sure, Roshan. I think it's very hard not to pick a sector today in Southeast Asia and be optimistic about its prospects. Of course, some sectors are more ripe than others on the user adoption curve. But just in line with what Wu was alluding to around retail participation in the market, we recently partnered with Wilson and some other investors to invest in Bibit, for example, that's just done a fantastic job in really democratizing access to wealth management products in Indonesia, right? It's like the macro.
You invest a winning portfolio.
Yeah. Indeed, and it's the macro tailwinds are so strong. The market has traditionally been underserved, and you have a platform today that's offering a wonderful user experience at a significant lower fee for first-time investors, right? Underpinned by strong education and social touch points, and that sort of led to very interesting flywheel effects and a highly engaged user base. So that's wealth management. I think, look, fundamentally, the benefit of Southeast Asia is the benefit of hindsight, right? We are 3 to 10 years behind that of markets like China, India, and the US, depending on sector. So we are in a very sort of unique position to pattern match from these countries. Though, I would caveat that you can't just take a Control-C, Control-V approach. These business models have to be adapted for local nuances and the mind-boggling diversity in this part of the world. And there's just so much of low-hanging fruit today, right? Because there are large segments of the population that still don't have, high-quality, consistent primary access to goods and education and financial services. And all this is further exacerbated by poor infrastructure and inefficient supply chains, which I think makes the region ripe for disruption. So we too are sector agnostic. We are looking at, we are looking at a bunch of things. They are very exciting trends. I think those trends are compounded by the fact that you have second or third generation founders now that are emerging, founders who have worked at some of the large consumer internet companies like, Tokopedia and Shopee, who are now, launching their startups. And of course, I think the big elephant in the room has always been around exits for Southeast Asia. But this is this sort of golden window today where you are seeing a lot of the large players, drive meaningful exits. And I think that's going to lead to, more investor interest in the region, more sort of later stage capital, flowing into Southeast Asia. And so, obviously that increases the, competition for folks like ourselves, but it just makes things a heck of a lot more exciting.
Great. Thanks, Sachin. Conscious of the time limits, but just to wrap up with the few points Sachin mentioned here. One is picking up models which have proved themselves in China, US, or other geographies, and trying to replicate those in Southeast. And just wanted to pick some thoughts from Wilson and Wu. To what extent do you see that still being a relevant mode of launching new businesses in Southeast? Or you think by and large the issues or challenges to be tackled in Southeast are fundamentally different, so it needs a bottom-up thinking to address these challenges?
From day one of these ventures, we have come up with this thesis about global problem and local problem. The whole idea running a company, entrepreneurship, is about finding a problem statement that you can solve. We differentiate between global and local problem. Why? Because global problem require a global ecosystem to solve. Will we invest in Facebook of Indonesia? No, because there is a Facebook in Silicon Valley with their ecosystem and doing well. Will we invest Google search of Indonesia? No, because Google search working well in Indonesia and abroad, right? So this is global problem. We always focus in local problem. Why? Because local problem require local wisdom to solve. So it's very clear. So based on that, you can see that the way we invest is very systematic, and it's really kind of like focused on how to ensure that using our local competitiveness and local knowledge, local wisdom, local networks, local information, intelligence, etc., we're able to help and value add our portfolio.
Great, helpful points there, Wilson. Wu, given that Temasek, I would say, has also been, while active in Southeast, you have also gotten the access to global trends and invested around the world. How do you see this local versus global, and what are the preferences, priorities, and how do you mix and match these?
I think many of us like to use when you look, for example, when we look at Vietnam, we typically like to use the case of Thailand or China in particular as a benchmark of reference point of where we can be. And typically people like to say that Vietnam is China -10, which is we are 10 years behind. And when you look at all the metrics, GDP per capita or spending, consumer habit, it seems to be like we are 10 years behind. But I think there's some there should be some caution around using China as sort of the ultimate example of where we can be or where we should be. For example, the super app that everyone is excited about. We have the mega successful case of WeChat, which gives you a real life vision for many companies or even countries of how a world managed entirely through your smart could look like, or managed through your one app could look like. But then the other side of the coin is that it's really the challenge to become that kind of super app. It's a humongous task to build a super app that really works. You need all the stars to be aligned, the right place, right time, deep access to capital, the right type of investor, and the right type of regulatory environment as well. So I think we would love to use other reference point like China or the Western world as the benchmark or reference point of where we could be. But we need to use a local context as well of where Vietnam is, what the Vietnamese consumers' habit will be, what the regulations are looking like, and what even the policy is trending towards in the next couple of years. So that is that's a point that we would definitely take seriously when you think about what type of business will be successful here.
Got it. Very helpful, Wu. This is just taking up one question from the audience. Essentially, this was a query about what are the next big trends, categories you're bullish on from the early stage investing side. I think broadly we have covered, but in case Sachin or Wilson or Wu, if you want to add to this, let us know. But my sense is we have broadly highlighted the question.
Give you an insight thinking about what does it mean trend. If it's obvious, it means you are too late. So that's our principle. So in each ventures, we always try to spot something that is untrending, something that is not obvious. And normally after we invest, it becomes a trend. So for that reason, it's very difficult actually to explain what is next coming. Because if it's become a trend, you're too late already. So that question actually is a paradox question. It seems like right, but it's wrong.
Nice way of addressing that question. Interesting. I hope Tarun's response, this response was helpful for you.
Of course,
Sachin,
it's not helpful. It doesn't answer anything.
so I think he has a framework now, hopefully not to go after current trends and look out for what those trends are going to be like looking ahead. So yeah, in case anything else our panelists would like to add on, we perhaps have just a minute or so to wrap up this session. Any final comments, suggestions, pointers, anything from Sachin, Wu, Wilson?
I was really tempted to ask Wilson, what is the most untrendy thing that you are seeing in your but I leave that to
No, it's okay. It's not obvious, you see, Wu. So that's why it is very important to be local, because you read signal. You read signal, you use your heart, and then you try to figure things out. You try to connect the dots. So that's the whole concept, right? Hence, sometimes in the seed investing, people say that you are doing spray and pray. Not many people knows that we pray more than spray, because we have no idea what will work, right? So we just keep praying, and hopefully one day it will work out. Yeah. So that's the principle of seed investing.
Got it.
Interesting.
Great. No, excellent. I think this was a great session for all of us at RedSeer, and hopefully the audience found it fairly insightful as well. And I would like to thank all of you, Wilson, Sachin, and Wu, for joining us